Good afternoon. This is Brad Dennis with BIS Commodities and your afternoon market comments for the first week of July. Before today, we were looking at corn down 7.5 cents, beans down 25.5 cents at the close on Thursday. Lower markets there. Today, though, we had a rebound. We saw beans be up 38 cents and we saw corn up 7.5 at the end of the day. First off, weather models. European model is hot and dry going out, so that adds a little bit of a bid to the market. The GFS does have some rains in it, and it'll be interesting Sunday night to see if the GFS switches over to the European model or not. We also have the Canadian model, and that's siding more with the European model. So what you don't want to see is pollination and hot and dry for the next couple weeks. Also, when grain fill comes about, we don't want those temperatures over 70 degrees at night. That usually takes some yield off. Now, with beans being up 38 cents, a lot of it has to do with maybe a relief rally. Today we came in at midnight. We saw that the U.S. had imposed tariffs on $34 billion worth of goods. China retaliated with tariffs on $34 billion worth of goods as well. And when we saw the markets, let's say around 6:30 or so, we were up 2 cents. So without the enactment of those tariffs, there is a little bit of a relief rally so that we can put that behind us. And then we look and see what is happening out there. And with the holiday, we had export sales today. And export sales showed us that there was switching from China to Bangladesh. There was switching from China to Pakistan. There was switching from China to the Netherlands. So you're still seeing demand for this product. Now, if we do see China come in here and cancel a whole bunch of beans, which still could happen very much so, you've got to look at that 853.5 area as pretty good support. So we'll see if that happens this week or not. Upside resistance, it kind of looks like in the corn we're about 381 basis the Decembers, and in the beans first level of resistance is probably around 920. In the energies, today we were off highs. This week we saw another hike in inventories for crude. So we're starting to come off that right peak that we formed about a week or two ago. We also have a president that's asking or tweeting out about how energy prices should come down. So you roll that all together with an increase with OPEC, you could see some lower prices down the road. As far as the stock market is concerned, it had a positive reaction to the tariffs, or maybe more so of a positive reaction to the FOMC minutes yesterday. Basically, the Fed a little hesitant to be aggressive with raising rates, taken as a little bit dovish. That being dovish, we saw the dollar decline to the lowest levels we've seen in the last couple weeks, and the stock market get a little bit of support. The cattle market started off the day very high and then backed off. There was some higher cash that was paid out there on cattle around the 112 area in Texas. But at the end of the day, the numbers that were expected to go weren't. So we're starting to back things up a little bit, and that's why futures came all the way back down to that 107 area. Remember, in June, we had quite the basis between where the board was and where cash was up until the very last day of trading, basically. So we might be in for more of that with the August. Plus, we've got a lot of numbers coming up, so that 108, 109 area might be seriously looked at by a hedger to lock in some prices on August. And that's just because, too, our boxes are down at some lower levels, 208 or so. Good movement this week, but once again, you've got certain tariffs out there and certain countries opposed to our exports. So it might be a good area to start looking at hedging. Also, this week it was kind of interesting too on Tuesday that Goldman Sachs came out with a note basically saying the month of June was terrible for commodities. They came down, they've bottomed out. Now it is time to re-own commodities, and a lot of the trade that we saw today kind of points to that. You could see the money flow coming in there. Now, how aggressive they are with the money flow, first level is short covering, second level is adding to long positions. Outside day up in November beans, that means dips will be bought. Over in the corn, that 360 area, definitely a supportive area for right now. Next week at this time, we'll be talking about the WASDE report. There are people that feel that the bean WASDE report will be negative and somewhat neutral on the corn, but we'll have to wait and see how they want to account for these tariffs and how they want to account for corn ratings and bean ratings going down the road here. So that is your market wrap-up from Brad Dennis here at BIS Commodities. If you have any questions, give us a call here, 1-800-373-2525, or you can look us up on the web, www.biscommodities.com.